Welcome to Apartment Market Dynamics from MPF Research. Let's talk about 2010, and we'll even talk a little bit about 2011 as well. The numbers for the fourth quarter 2010, they're still from our preliminary data set. However, we're getting very close to finalizing those numbers, so the final number shouldn't change by more than 1/10 of a point or so. And Greg, at the end of 3Q, you were calling for a basically flat performance in fourth quarter 2010. Now that those numbers are in, what do you think?
Well, there was a little bit of backtracking, Jay, and that's really seasonal. So no real loss of momentum. And you look at the big picture, the story remains the same. Pretty phenomenal performance in 2010 when you look at where we were a year ago and just how much progress we've made.
Now let's look at some numbers, starting with occupancy. Our preliminary figure for fourth quarter 2010 across the country shows overall occupancy at 93.5%. That's down a minor 0.3 points from the results seen in September, but it's up an impressive 1.7 points in 2010 as a whole.
And we got there with some really stunningly strong demand, Jay. You look at the calendar year as a whole, absorption in the top 64 markets came in right at 248,000 units, and that's about 4 times the completion volume of roughly 60,000 units.
And Greg, let's look at rental rates. Here's another chart for you. Typical rent pricing fell down just a little bit between September and December, cooling 0.2% in fourth quarter. Still, compared to where we were at the end of 2009, effective rents were up 2.5%.
Well, all year long, Jay, operators have been really fast to react to what's happening with the occupancy number and adjust those rents. And several factors come into play there. I think the first one is that during the recession, investment activity and development were pretty much off the table. So a lot of companies really concentrated on operations, and the operators really stepped up their game there. Also, I think important for the operators is that transparency in the industry gets better and better all the time. So as we got to a position where you could start raising rents, the operators really knew we were there.
Greg, as you look at some of the metros across the country, do you want to highlight some winners and losers for us in 2010?
Well, Jay, obviously we're going to have a lot of videos coming up that dig into the details metro by metro, but I think the key point to make is that there really were pretty much all winners. We only had one metro that had negative revenue results, looking at that combination of the shift in occupancy and the change in effective rents, and that was Las Vegas. So otherwise, very strong results from market to market.
And Greg, we just did a 6-part series on what to watch for in 2011. If you haven't seen those, you can find those at our website. But Greg, to put that in very succinctly then, looking to 2011, what's your revenue forecast?
Well, we think that occupancy is going to trend up a little bit, probably actually not as much as it did over the past year, even though you're going to have a little bit stronger employment growth. What I think will happen is that operators are really going to start to emphasize that rent side of the equation, pushing up rents aggressively. So our overall expectation, about 6% revenue growth during 2011, 5% or so of that coming with rents, maybe 1% on the occupancy side. So 5% rent growth. How are we going to get there? Because so far inflation has been pretty low, and so has wage growth. And 5% rent growth is a pretty big number, but I think what's going to help us is that the top tier product is pretty near full capacity right now. You're not going to have new supply coming online to add to their competition, and the danger of driving people out to buy homes with higher rents is pretty minimal at this point. So again, really aggressive at the top end of the market, and that's going to be enough to raise the tide for everybody. Thank you, Greg. And that wraps us up for today. Join us next time as we begin our metro by metro look at some of those results from 2010. So until then, for Greg Willett and for MPF Research, I'm Jay Parsons. Thanks for watching Apartment Market Dynamics, and Happy New Year.
Want more? Go deeper with MPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.